CrowdStrike stock is taking a tumble today after a massive global outage was caused by a glitch and an update to the company's security software. Is this a great opportunity for investors to be buying CrowdStrike stock? Is it time to get away from this big winner that might be about to lose some of its biggest customers? I'm Jason Hall. This is Investing Unscripted. We're going to take a closer look at what's going on with CrowdStrike, talk about the stock, the valuation, talk about the business, and see if we can come to a conclusion to help you figure out your answer. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you really should go to our special link. You see it on the screen. It's fool.com/unscripted. Go to that special link and you can get access to The Motley Fool's 10 best stocks to buy right now. Definitely check out that link. It's something that can help you reach your investing goals better. Okay, so here we are in real time. CrowdStrike stock is down about 10%. It was down a ton in pre-market, kind of bounced back when the market opened, but is still down by double digits. And, well, we don't even know the full implications on the company's business as far as what is going to happen. But I do want to give a little bit of context to what this sell-off means. So let's go back in time a little bit. I've updated the chart here. This goes back to April 29th. So basically the end of April is where CrowdStrike's stock is now resting. Given up essentially all of the gains from late spring and so far this summer. It's kind of a multi-day sell-off that we've seen. A lot of other tech stocks have taken it on the chin a little bit and have come down. CrowdStrike's kind of ridden that down along with us. Basically, given up all of those gains, it was close to a similar price in early June as well. So what does all of that mean? How should investors be thinking about this? Is this a great big buying opportunity? Well, a couple things you have to consider. First of all, even with the sell-off, what does it mean for valuation? I think that's really important. So we'll talk a little bit about valuation. And then I want to take that valuation and put it within the context of the company's financial results and how much its cash flows and earnings are growing. So that's really important to think about valuation as well. There's the valuation you're paying today, but there's the earnings growth that you're going to be owning once you own that stock. That is what's going to drive future stock price appreciation. So we'll talk about that. And then we're going to take a look at the actual business results itself. The company's reported. Think about what are the implications, reputational harm that's happened here, and how concerned should investors be, or should we be licking our chops and taking this as an opportunity to buy? All right, let's start with the price to sales ratio. Now, I'm going to use some cash flows ratios as well. I want to use price to sales because for a company like CrowdStrike, that's only been in the past few years that it's been GAAP profitable and really started to generate more cash flow than it's paying out in stock-based compensation. I think it's a really important metric to think about. In other words, growing cash flow that falls down on a per share basis to shareholders. We've only really seen that in the past couple of years. Here's the thing. We see it's, even after this recent sell-off, we see it still trades for 23 times sales. I'm going to throw a couple of companies up here just to put it in context. So we're going to put SentinelOne, which is one of its competitors. We're going to put that one up here too. And you see it trades for less than 10 times sales. So a couple reasons why. Number one, CrowdStrike is dominating in this market. It is by far the market leader. SentinelOne is growing quickly and they're getting established. But again, they're the second fiddle here in terms of companies that really focus more on this AI-powered endpoint security thing. I wanted to throw another one up here too, just to put it in context. A more mature company, still growing, but again, this is a giant company, Microsoft, so it trades for about 14 times sales, hugely profitable, growing its earnings, certainly not growing at the rate of CrowdStrike, unlikely to be able to grow at anything like the rate that CrowdStrike will in the next 3, 5, 10 years, but massively profitable at scale, right? So that's kind of where Microsoft falls in here. So the key, I want to stress this, really trades for a really high premium on that sales-based multiple. Now, what about on cash flow? So we'll take a look at price to operating cash flow per share, 60 times, almost 61 times. And again, you see a similar trend, right? It's really come down from where it was a few years ago, but we've seen a pretty substantial amount of multiple expansion on these multiples over the past, year and a half or so, to where 60 times operating cash flow, not cheap. It's not cheap. Stock's down, it's down the cheapest it's been in a few months. Still pretty expensive though, by most of the useful metrics to try to value a company like CrowdStrike where it is in its earnings and cash flows and revenue growth phase. So let's take a look at some details about the business itself and some growth metrics. I think that's really important. So I'm going to start here just with the growth rates of some really key metrics. So gross profit, earnings per share, free cash flow in the bottom right, and then operating income up here in the upper right. So growing gross profit dollars, subscription gross profit dollars here. This is the first quarter result, 34% increase in gross profit dollars. Now, again, gross profit, this is revenue minus cost of goods sold. Gets 80% margins there. You got to work through the operating costs of the business, and you see operating margin and free cash flow margin. 22% operating margin and then 35% free cash flow margin. This is important because you see these numbers are growing at much, much higher rates than they're growing their gross profit dollars. Again, that's where operating leverage kicks in, because this is a pretty asset light business and pretty low fixed operating costs. That's really, really important, really valuable, because that's how you grow your operating income 72% and your free cash flow 42%. So the key here is operating leverage is working out. And those multiples that we talked about those rich valuation multiples. Well, you still sometimes think about paying a rich multiple when the company is growing cash flows and earnings at the rates that it's growing. Okay. So again, I'm not saying this justifies paying a super high premium, but I think it puts it in a little bit better context thinking about the valuation. Revenue grew 33% in the quarter. They grew their earnings at 63%. Earnings grew at almost double the rate as revenue grew at. That's really, really important. So let's talk about the strength of the business. So CrowdStrike, again, if you've read any headlines, it's pretty clear this has affected thousands of companies, millions of people around the world, flight cancellations, surgeries canceled, medical centers having to not do procedures, just some massive, massive impact on a lot of people. And that's because, well, a lot of businesses, a lot of organizations have come to really rely on CrowdStrike. So that's like the positive of this, is that it shows how strong the business is, how big it is, and how reliant its customers have come to be on it. And increasingly so, because you look at these numbers of modules that its customers are adopting, these numbers continue to increase every single year that goes by. Customers are signing up for so many modules out of the gate now that they're showing continual growth in that. And it's a massive addressable market. Company expects it to go from $100 billion roughly this year to $225 billion in about 4 years. Okay, so talked about a lot of stuff, talked about where the stock is relative to where the stock price was over the past few months. Taking a look at valuation, on the surface looks pretty expensive. Tried to contextualize what that valuation means when you think about the growth rates that the company is delivering, and then the implications for its business. So we talked a little bit about the opportunity. So the question we don't know the answer to is, how will its customers respond? Part of that's going to be based on how quickly the company was able to get a fix out there. And the company acted really fast to get a fix out there. A lot of companies were just rendered inoperable, right? The businesses simply could not run when their Windows-based software caused their computers to crash and they couldn't function, right? So will some of those customers start to look at competitors like SentinelOne? Probably so. I'm sure some of them will. I got a text early this morning from a close friend who is in security operations, and his text to me was, "I'm so happy we did not go with CrowdStrike." So how many people went with CrowdStrike that are now questioning that decision? We don't know. I don't know if this is going to upend the growth rate, increase the competitive opportunity for companies like SentinelOne, but I think it's possible that that could be the case to some extent. So what's my take? What am I doing? Well, I'm not doing anything right now. I've got a pretty decent sized position in CrowdStrike. I could certainly make the case for anybody that wanted to buy the dip here, add to a position, maybe start a position and look for these kind of opportunities to build up by owning a really strong business when the market gives you a better opportunity to buy at a good price. I can make the case for that. I think this is not something that's investors should be selling over. This is still an exceptionally well-run business that is the category leader by far in a massively growing market. And I don't think we're going to see a massive exodus of its customers going to SentinelOne or going to any of the legacy cybersecurity companies out there. I don't think that's a realistic thing that's going to happen. So really depends on your individual situation. It's time to buy. Maybe it might be a time to nibble a little bit, add some. I don't think this looks like a time to just load up the truck at all. But I do think it's an interesting, compelling time to maybe think about nibbling around the edges, adding a little bit to a position. Most importantly, investors should just be patient right now. You don't have to make rushed, rash decisions when things like this happen. Play your own game. No need to rush out there and make any major decisions over this one little event.